No one had a seat closer to the financial crisis than CNBC anchor Maria Bartiromo. She recently won an Emmy Award for her reporting on the crash, and now she's written a new book, The Weekend That Changed Wall Street. Maria, thanks so much for being here.
Great to see you.
So, a lot of books have been written chronicling the crisis. Why'd you write this?
You know, I wrote the book because I felt like I could give a little more perspective and not just write about that weekend, but really write about the implications of what happened in the financial crisis. I felt like I had this front seat, being able to speak to the insiders morning, noon, and night, whether it would be on CNBC or my weekend program or my column. And I felt like because I had such closeness to what was going on and was able to speak to so many people, I really had to record it. So I began when life was good in 2006, when big private equity guys were having parties, people were taking out mortgages in some cases they couldn't afford, and then go into when we started to see cracks in the system, go into that weekend, which of course was filled with panic, and people were really worried that the financial system was on the verge of collapse, and then come out of that and look at how things have changed, where Wall Street is going, and what does this mean for the average investor.
I was interested because in your dedication, you challenged the next generation to learn from our mistakes. So what did you learn?
Wow, that's a great question. You know, I did learn to be a little more skeptical about things. I think that, over time, and this has repeated itself many times in various bubbles, whether it's .com or, when we were all piling into .com stocks because it was .com at the end of the name, or when we were talking about oil moving all the way up to $147 a barrel, Goldman Sachs comes out with a report saying it's going to 200. Of course, it went to 32, and then housing. I think that as a society, and the media is included in that, and I think we all should take responsibility for missing it or not, or sort of drinking the Kool-Aid of believing that just because something's positive and going up, it's going to continue to go up. I think as I look at what happened, I say, you know what, it's probably smart as an investor, as a reporter, as a consumer, to just question, kick the tires a little. It's amazing that when we buy a car, when we buy so many things in our lives, we kick the tires, we really investigate, is this right? And yet when it comes to our money, we just, say, oh God, it's over my head, I'm not going to deal with that. And yet, when you look at, what went on in the housing crisis, there were a lot of signs that it didn't make sense. I mean, 2005, 2006, pick any market. Let's say, I've been looking at Phoenix, for example, Arizona. In Phoenix, home prices were up 40% year over year.
Unbelievable.
Unbelievable. I mean, why? Was the infrastructure any better? No. Was the school system any better? No. There was no fundamental reason that caused prices to go as high as they did and stay there for as long as they did, other than this urgency that said, buy, got to get into the market now, got to buy a house now, got to sell a house, just participate in this housing boom somehow. And in retrospect, I think it brings you back to the simplest of notions. If it looks too good to be true, it probably is.
Yeah.
If you don't have the salary and the income to support $1 million home, I mean, come on.
Right. It's to listen to your parents. It's like your parents and your grandparents probably, you take that advice, you would have stayed out of trouble, most likely,
so
right?
I think maybe I'm a little more skeptical and wanting to, question things a little more. And I also think, it's that constant reminder how bad debt is.
Absolutely.
Save, have a nest egg.
You also said that the crisis created humility in Wall Street CEOs and a recognition that they were not gods of finance. I think you were talking about John Mack, former CEO of Morgan Stanley. Now, during the boom years, you interview all these guys. You're around all these guys, right? Did you suspect that there was going to be a fall from grace? Did you have in your belly, did you say, how is this possible? Is this really going to go on?
I can't say that I did. I mean, I certainly was not aware of the leverage, and I don't think half of the CEOs were aware of the leverage that they had taken on at their companies. So it was difficult for me to really understand where we were going because I didn't understand the balance sheet issues. But in retrospect, I can remember an interview that I did with Steve Schwarzman in 2006, and I said to him, "How's everything going?" And he said, "I could do a tens of $billion deal right now overnight with no covenants, no restrictions and high costs in terms of lending." That is unbelievable. And today, thinking about that makes you say, okay, obviously that was something that was not sustainable. But when I would speak with the so-called lords of finance, I think that they painted a picture that we had booming business. A lot of people wanted to participate in the housing market, and I think even if they were questioning it, and I think some were, Goldman Sachs, for example, was coming up with ways to short the housing market for certain clients. I think even if you were skeptical, you also, as a CEO, were not agreeable or willing to allow the business to go somewhere else. So imagine John Mack at Morgan Stanley coming out and saying, okay, housing is booming and we're securitizing all these mortgages, but you know what, it doesn't make sense, so let's not do it anymore. Yeah. Where's the business going to go? It's going to go next door to Goldman Sachs. It's going to go next door to Smith Barney. So I think that even though some people did say this doesn't make a whole lot of sense, there are cracks in the system, they were not willing to not participate.
And one final question before we wrap up. You say in the book you were fascinated about wealth being obliterated. And that's among the uber rich, not obviously with ordinary Americans. What fascinated you about that?
Well, what fascinated me is the speed with which this happened. I would come into work and the market would be, up 100 points. By the close, it could be down 700, and it was down 700 around the world. The speed with which this took place was extraordinary, and that was just markets, not to mention the 8 million jobs that were cut. So I really was fascinated by the fact that when one piece of information catches fire, like this firm is having a run on its bank, immediately the entire system comes down. And it happened very, very quickly. And not just to Wall Street, but to the largest of industrial companies out there, faced with, oh gosh, the commercial paper market just dried up. Are we going to make payroll? Will the lights go out tonight? That is certainly fascinating. And by the way, not in a fun way.
Yeah, no. We don't have to do this again. Like, we've already been through this. No more dress rehearsals necessary. Been there,
right.
Done that. Maria Bartiromo, thank you so much for joining us.
Thank you.
And thanks for watching.